Sprinklr stock just took a massive hit. We're going to find out why that happened, but first let's talk about what Sprinklr is and what they do. Sprinklr is a software platform that is in the business of customer experience management, which is the reason for their ticker CXM, Customer Experience Management. According to Sprinklr, the modern customer, somebody like you or I who shops a lot either online or in stores, has a lot of decisions to make, right? Every time we want to buy a product, we usually, at least if you're like me, go online and compare different reviews for that product before you actually decide on what to buy. So what Sprinklr does is they help companies aggregate all of those reviews and everything that everybody is saying online on the primary main social platforms that they follow. They aggregate all that data and put it together and deliver something to the customer that's tangible. So let's say you want to buy a nice new pair of headphones, right? Like you like to listen to music and you want just a new pair of headphones. You're probably going to go online and look at a bunch of different reviews for a bunch of different headphones. And in today's age, you can do that. I mean, you can search for anything. And so what Sprinklr does is they're going to find all the reviews and see if there's common themes that they can send back to the company. So if you buy some headphones and you notice that the bass frequencies on certain songs don't sound that great, maybe they're a little bit muddy in these particular headphones, you're going to leave a review. And if enough people leave that same kind of review or talk about either muddiness or bass frequencies with these particular headphones, Sprinklr is going to aggregate that, filter through all this unstructured data, and send the results back to the company so the company can improve. So let's talk about why I'm covering Sprinklr today. So I'm covering Sprinklr because one of my lovely video viewers left a comment saying, make a video about CXM stock, please. So your wish is my command. I'm happy to oblige. So this is my video on Sprinklr. And if you guys have any suggestions of stocks I should cover, please honestly leave them in the comments. I'm working on putting together a schedule. I'm going to try to do Tuesdays and Thursdays. So as I line up videos, I would love to take your suggestions, make sure that I'm delivering what you guys want to see. So like I said, Sprinklr caters to the modern customer who is somebody who wants a personalized experience, somebody who compares brands and is quick to either embrace or abandon a brand based on one interaction, which is why, in Sprinklr's view, customer experience management is so important. It can help you either retain customers or at least not lose as many customers, right? So here's what Sprinklr does. They help people reach, engage, and listen to their customers using public conversations across 25 social platforms. So essentially, they are a social media listening platform, as I may have mentioned. It's a little creepy, but don't think too much about it, right? It's all public. And then the fun thing is that they're a bit of a niche AI play. So they use their algorithm to turn all this unstructured data, right? Unstructured data is anything that hasn't been tagged and categorized, and they turn it into structured data. So they put it into a way that the company can understand. So they also have real-time content optimization, which allows for specific targeting to customers, improves engagement. So let's talk about their earnings, because this is what sent the stock spiraling, right? So their earnings was just last week, and their stock dropped over 30%. So that's a big drop, right? So what happened? So as you can see from this graph, their total revenue has been climbing, right? They're a software platform, so ideally, as long as people don't drop their platform, they're going to keep renewing every year. And as they get more customers and upsell their customers, that line is just going to keep on increasing. That's why I love SaaS businesses, right? They're very predictable in their revenues, usually very nice margins, very good, easy growth, because unlike products, you're not having to manufacture something new every year. You're just kind of selling your same software to new people and making updates as they ask for it. Anyway, back to the earnings. Their recent quarter was actually really solid. So they had a nice revenue beat, and they actually raised their full year revenue guidance. So kind of like what we saw with HashiCorp on my HashiCorp video, they raised guidance, they had a beat, but the stock got sent tumbling. So that tells you that there's something else going on that maybe the company has guided to that is not good. With HashiCorp, it was their net retention rate, or their NDR, net dollar retention. The Sprinklr is their contract wins. So their contract wins are slowing. They're guiding that they're not going to have as many wins in the coming quarters. So why is that? We don't know. What my thought is that maybe this is a nice to have product as opposed to a must have product, right? So A must-have product in the SaaS world is maybe something like a CrowdStrike, that provides cybersecurity. You can't really get rid of your cybersecurity provider because then you're going to get hacked, and that's very bad, right? But with Sprinklr, can you get rid of it and still be a good functioning company? Yeah, I think so. I think Sprinklr is a luxury add-on for a company, right? Like, it's not a necessity. It's really nice to have, and it's definitely going to help. I mean, it's proven that it's, helped companies to, interact with their customers and reach their customers, but I just don't think it's as sticky as certain other platforms like CrowdStrike that I mentioned. Completely different industries, but I'm just giving an example of something that's a nice to have versus a must have. All in all, I do think that this drop seems like an overreaction because every other metric seems to be nice. Their number of large customers over $1 million per year are growing, which is great. And like I said, their revenue guidance was a beat. So let's go to my spreadsheet now and find out how CXM scores. So here's my spreadsheet. It says disruptive investing themes. And I have a score that I assign to companies based on 4 metrics. The 4 metrics are revenues, growth, margins, and valuation. Sorry, I was trying to find Sprinklr here. Here it is. Okay, so Sprinklr gets a score of 11 on my sheet. And this is all objective, by the way. It's not me saying it's an 11. It's me who creates the formula, right? Like, I made the formula of what I look for, but then the formula just tells me what the score is. 11 is my average for my entire spreadsheet. So that tells me that the company is not terribly overvalued or undervalued, right? One thing I like to see is that their price to annualized sales is 4 right now. That seems very low for a software platform. Their margins are fine. We talked about MongoDB last week. Same margins as MongoDB. It's really, really good, but for a SaaS company, it's kind of meh. Nothing that makes me super excited. They're almost at $1 billion in annualized revenue, so that's very nice to see. They're going to be probably hitting that within the next couple years. Their annualized growth, or their year-over-year growth, I should say, is not amazing. Software companies, and HashiCorp's just dropped into this level as well with 16 or something. 18.5, I mean, that's great growth. Like, I love to see that in the double digits, but man, software companies set this precedence of being high growth. And so when I see 18.5, I'm a little disappointed, but you also have to remember that we're in a time where every company out there is experiencing macroeconomic headwinds. I mean, I can't tell you the last time I listened to, I don't listen to them, I read the transcript. I read an earnings transcript that didn't talk about some kind of economic headwinds in their earnings report. I mean, this is hitting everyone. So this tells me that if you're interested in the Sprinklr, buying now would get you in at a very attractive price to annualized sales of 4. I mean, that's just, for a software company, that is rock bottom. I mean, I don't think I've seen many other software companies that are that cheap. Company's still growing, even though it is slowing. Their growth is slowing. We got to acknowledge that. Everyone's growth is slowing. And I think once interest rates start to fall, once the economy recovers, I think this is going to be a long-term winner. So I think if you've got some patience, buying CXM right now is probably not the worst thing you can do. I'm not going to tell you to buy it. I'm not going to tell you not to buy it. I probably will go ahead and buy this stock. I've got some cash sitting around, and I've been kind of waiting to put it into something that looks appealing. So thank you for that comment telling me that I should analyze it, because you've given me a nice little stock to analyze. I've never seen anything like this before. I think CXM is a really fun idea for a company, and it seems to be working really well for them. So what do you guys think? Do you have any concerns about Sprinklr that I didn't mention? Do you think it's a good buy here? Do you think the drop was an overreaction, or do you think it was fair? Let me know in the comments. And if there's anything else you'd like to see, please let me know. If you liked this video, please feel free to give it a like. I think that helps the algorithm to push it to other people. And please subscribe if you like videos on technology stocks, software stocks, just investing in general. I'll be here posting content probably twice a week. So anyway, thank you so much.